Hey everybody, DayTraderRockStar here with a market prep video for Friday. Coming up Friday, it's going to be 12/15, which is December 15th. We're getting closer to Christmas, and we're in the most bullish time of the year right now, and it's shown. The market has taken off. So we're going to do a little review here of conditions right now. We've been trading. I'm DayTraderRockStar. I host a show every single day live on the internet, and on, you can listen to it anywhere on TuneIn Radio, Day Trading Radio on YouTube. Just do a search anywhere you find it. You'll find it. Day Trading Radio, DayTraderRockStar, but .com. Just do daytradingradio.com. So we're trading all day, and we've been trading a lot of the futures recently, and I've actually taken some stocks off today. We go into that also a little bit, but I'm going to try to cut these videos down a little bit shorter, because I know everyone has a short attention span these days, and they just want the information. And I tend to go into it because, I have a lot of information to share. So I tend to make my videos really long, because I love talking trading and stuff. But I'm going to try to do my best to tighten those up, make them, get to the point, and really just, give you what it is. But there's education that doesn't, that I feel is very important. Like if I see something here, like example today, there was a great flag. There's a great flag fall. Excuse me. I'm all over the place here. Let me calm down for a second. I'm trying to do this too fast. Today, I want to go back and show you some of the levels, first of all. And let's back it up a little further. The Dow made all-time highs today. The NASDAQ and the S&P are approaching levels that, are excellent. And, I would say the S&P, I have a call for the S&P to hit all-time highs on January 1st, or give it take a day or two. January 1st, all-time highs in the S&P. Now, 2 days ago, we wouldn't expect that, but since the gigantic move we've seen, and this is actually well within our range of getting to. So I want to hold on to that prediction. The market has exploded out of the FOMC rate decision. I think most of the market is pricing in or starting to understand that things are closer to the end. So of course, when the market is in a rate hike cycle, it tends to not perform too well. If it's in a rate cut cycle, usually it's better for stocks, and it's already taken that, it's already pricing that in a lot. But again, we don't want to lose track of the forest among the trees. I think that was a great saying. The market's doing what it's doing, but trading as short-term traders or stock traders, which we do both, options and stocks, and it's we're using the market to make money. It's great to have long-term portfolios, but when I go over charts like this is for us to make money during the day. And it's just when we come to see something that happens over and over again, I want to share that information with you. So today we actually had we had a continuation move, and then we had a big sell-off around 1 o'clock. And that was at lunch right at that point. That was funny that happened. But before that, we had this nice little falling wedge pattern. And I kind of marked it off on the chart during the show, daytradingradio.com. And we talked about how do you measure what's a measured move out of a wedge pattern. What a measured move is, if you have a pattern, recognizable, a pattern that's well-known pattern, a head and shoulders, a channel, a falling wedge pattern, a rising wedge pattern, a flag, all these bigger patterns, because they've been around so long, there's been a lot of studies on them. We have what's called measured moves. So if the wedge pattern, up, rising, or I like the falling wedge myself. I've studied these for 20 years, and I know every ins and outs of it. I know exactly where it breaks down. I know the percentage areas, and when you have a divergence with it, how far it goes, and the measured move out of a falling wedge. And that's what we're going to look at right now, in case you don't know how to figure that out. Here's your wedge pattern, and it's basically you just kind of, you see it start to happen. I could see it tightening up, and I said, all right, let's put these trend lines in here. And they all kind of match up. I can probably go out to this one. And if you're looking at the extensions, I usually take the closing prices, and I let the market talk to me. I mean, if the closing prices are matching up and then it actually has a couple extensions in it, but it's mostly all around, where the closing price is, then I'll keep it there. It's this is not an exact science, but this is like, you see what I'm looking at, and you just got to understand the market tends to kind of explore those ranges, but overall, there's not much down there, so it comes back pretty fast, and it stays within these patterns. And these patterns, well, they play out a certain way when we see them. This was at 1040. It was actually kind of a double bottom here. And why do you say double bottom when this low is not lower than this low? A lot of people will just be scared out of that because they're looking for a pure double bottom. But over the years, I've learned that it's really about the closing prices. So if the closing price on this group of three right here are lower than the closing prices here, then we have what's called a closing price divergence. And if we have that closing price divergence and a higher low here like this, then that really does count for a nice little move. So there was a little divergence there. There was a nice little pop out of there. And when you have a falling wedge pattern, you take the lower trend line, and what you normally do is you make it like that, and you drag it up to the top of the trend line here. And again, you want it at this point, you're already in there. So I'm looking at the closing prices here. I'm seeing where this market's telling me to be, right about here. So either way, it eventually breaks out. But this is a channel, and then these trend lines are great to extend out. I always extend my trend lines and watch them because these trend lines, and there's a word, I always use this word. It holds its integrity. It holds its strength. Meaning you can extend this to infinity, and there's always going to be a map out there because it's a straight line. A straight line is you could extend that to infinity basically. Just and it's very easy to calculate where this is and where the price is going to be. So there's a lot of algorithms that'll work off of this. You don't even have to have these trend lines up there. It knows where the trend line is. And I'm just showing you where these trend lines are and where we're going to get reaction. So I'm watching this top trend line for reaction, and I'm watching this bottom trend line for reaction. As you can see, we broke that. And look at how we came down. I mean, why didn't we go through there? Why didn't we go through that? We didn't. We kind of just rode it, kind of just rode it up, kind of pushed it down, and we came down through it a little here, almost capitulated. At that point, we're oversold, and we're really embedded down here. And at this point, this is a rule that we have here at Day Trading Radio. It's when the 60-10 stochastic here is under 5, under 10, under 5. This was down at 5, 7, 5, 5, 4, 4, 3, 2, 2. When you have that type of weakness and you're embedded down there, usually, most likely, this is a George Lane study. He's been doing this. He invented this, and in his personal diary that I have at my office, he said, when those stochastics get down underneath or very close to 0 or 100, look for the trend to continue. So once this got down to around 3, I said, this is not looking too good. We're going to get more downside. To be very careful. Now, if you had a trigger here, and lots of times people have the bot on, and the bot's going to give you possibly an entry here because they're oversold, but there might be a little divergence. There might have been a little divergence here. I'll run the bot after, and we'll see if that was picked up there. But the question was that if that qualified for a divergence and picked it up. I'm not sure it did or not. It didn't go too far, and by the time it confirmed, it would have been this candle right here. You'd probably be lucky to get in at that candle, and it's not giving you really much. But this is the key. This is the secret to trading right here. If that, you have to be a machine. You have to be a robot. You have to be an AI. You can't have emotions. If the market's telling you something, you're selling off hard, you get a fast rotation back up to 80, and this is under 10. You sell it every time that gets up there. You want to either short it or sell your long position. That's giving you an opportunity. That's as far as it's probably going to go, especially if it's been embedded under 10 for a couple candles here. There's a good chance it's going to continue. So, especially your first bounce. Your first bounce is your first little bounce, and then the sellers come right in, and then you know, it's all downhill from there until it's not. Until we get down to look at this trend line back here. Isn't that kind of funny? That it did cut through it a little, but again, I didn't. Maybe we could have put it down on the extensions there. That would have been almost perfect. I want to stick to my rule of using the closing candles, but sometimes you'll just have to have an area of interest. If it gets down here and you have the closing candles and it's all around that zone. So what I normally do is I'll take a circle. When you see our circles on our map representing the positions we got into, I usually start off and I'll say, watch this area. And even at that point, you should be, that area is, before the trend line and after the trend line. It could come down a little bit further, but that's our area of interest. And it's also quad rotation. So 1, 2, 3, 4, and now it's starting to move. And once it started to move up, then you want to be long. And we caught some good flags here. And this was a perfect flag we caught today. And this is what I wanted to actually do a video on today, which we will, probably next. Part of the School of Stock course for Day Trading Radio members. So if you're a member of daytradingradio.com, which is very reasonable for what you get, live shows, watch list, live trade alerts, the chat rooms, hundreds of traders trading futures, options, and stocks. Every single day we get together, friends from all over the world in our chat rooms. It's really a great community of traders. So check it out, daytradingradio.com. And we trade these setups all day. Today, call this bull flag. We don't forget to sign up for the Zello network. Now there was a little danger in today's action. It was a very whippy day. I think I put out maybe 2 alerts today. But there was nothing really that this probably could have deserved a better entry back here at 11:30. I'm looking back here. I didn't even see that one here. Oh, that was a nice one. That was a 44. That was, again, wasn't a closing price, but there's another type of divergence where I call it a relative divergence, relatively speaking. The candle comes down and takes out the previous candles, even though the area, relatively speaking, the area is very flat line here. It's not really breaking down through that level. It's closing above it, but the candle came down and took out the lows. But this was much higher. 14.3 and the 44, especially the 44 here. I didn't realize that. That would have been a key area to get into. I don't know if I called that or not, but I know I didn't call the 44, and the 44 is one of the most important divergences we could find. And because it wasn't a pure divergence, where a pure divergence is a divergence like we have a normal looking divergence. This would be a pure divergence right here, a lower low. The candle's lower, higher low on the stochastics, all right? And that was a 44 too. And that was right at the end of the day though. But I did call that one at the end of the day. We did have a little divergence at the end of the day. And a nice little pop. So, I mean, look at how great these really worked out. And when we talk about, what the market does overall, well, it's sold off and stuff, you don't need to be in the market all the time. You need to be in only when you have this setup. The number one setup is that divergence setup, plus the quad rotation, which is the super signal. We have that running. But also remember, if the market is selling hard off, you can get false alerts. In this chop here, you could easily get a divergence and be oversold and kind of somehow sneak in a trigger there, and it might just fall off. And whenever you get a signal, all right, and this is going to be something added to the script, because I thought I was going to drive home today. I said it's going to be easy enough to have a little switch on there that when you get a signal and there's a fast rotation up to 80, they take it off. Now the switch is going to be on or off. You're going to have to turn it on and off because you're going to be trading in a certain market condition. So you're going to determine if you want to use that rotation, meaning that you want to get out faster. You're not going to just rely on how many ticks you have in your parameters, but you're going to rely on how fast this rotates. So you might have 6 ticks as a profit target and it only went up 4 ticks. But here, you maybe went up 2 or 3 ticks or 4 ticks and it hit 80, and you would have gotten out with maybe two tick profit there. Better, and not have to suffer the big drop here. So you're going to have that option to do that. I'm looking forward to that. It won't be that hard to do. I just got to find the time. But that's something that I think is, I've been talking about that setup for a while now. And here I go. So, take a look at the setups now that we should be in. These are the only ones we should be in. Here, possibly here, but a fast rotation gets you out early. I don't see a divergence there, though. So it said possibly there. I don't see it. This was a good spot. That's a tough one because the market was selling off really hard. But once we started moving back up, then we concentrated on the flags. And again, you can see that one flag. And we had a nice divergence here on this flag, little extension here. Whenever you have a pullback and a divergence in that pullback, that is even super bullish. That is extremely bullish right here. And that was at the end of the day. All right, so couple good setups there. At the top here, look at this. So it's a really choppy area this morning. It was really, really a tough trade. And we kind of said, I really didn't want to be involved in it. I said, let's give this market time to kind of settle in. Because look at this. It went down. It popped back up, down, popped right back up to the highs, popped right back up. These are big moves. This was 92 to 78. Wow. 14 points, 10 points. Each one of these moves are like 10 points. These are big, fast moves. Pre-market, though, we didn't talk about it. Pre-market had a good relative divergence here. Once you see that flat line starting to happen, things starting to hold up after 3 times, and it holds here after 3 times, and it's just holding off that original low back here. It's holding this one. This was a low. And even though we got down lower here, this held way above that low. So you have a real long divergence there. And that was news there. That was the PPI, I believe. So you're not even, that's news. There was another divergence, 4:30 in the morning. Been seeing them at 4:30 here. Now, again, it's a sloppy one. Not everyone's going to see them. But there's definitely, you can see it. Right? If you're going to keep on showing it to you, then you're going to see it. You could really see it when you start to zoom out on the chart and just kind of see if I can zoom out on this. You can see one back here. There might be one over here. Yeah. All right. Well, that's where we are. That's where we left off. That's where we are. Going into tomorrow, actually, I'm looking at the big picture here. Do you see this? Let me see something here. I just looked at my picture, and it's like I see a big pattern here playing out. Let's see where these lines line up here. For those out there that are getting the Futures Trade Alert Network, today was kind of a tough day to throw things out there because of the chop. So I kind of held back on some stuff just to let you know. Some people were wondering if there was any signals today. It was just a very whippy day. And I want to make sure everything works out. So we had a small divergence call, but it didn't pop too fast. It had a little pop on it. Now I'm looking at this as a what we call a slanted W right here. Left shoulder, head, right shoulder, big pop. And then the market pushed up. This is what I want to follow this down here. Let's extend that all the way. And I want to make it a different color. What's the colors? Let's make it yellow. All right. Wow, look at that. I just went out. I went, which way I'm going? I'm going the wrong way. There it is. Here it came back into play here. I'm looking back over here. It tagged a few times. Came back over here. We popped up to it. That's where we are right now. We're kind of holding above it at the highs right now. All right, well, let me move that back over here. No trading overnight tonight. It's not going to be too fun. All right, well, let's just take a final look at the S&P here. We'll take a look at the NASDAQ also, and the Russell. At this point, again, don't lose track of the, how's it go? The forest through the trees. The big picture is great. We're gonna have our pullbacks coming along. Maybe tomorrow there's a pullback. We have triple witching, stocks, options, futures. So we might have some volatility in the market. Hard to say. We're definitely gonna some movement. So it's going to be a good day to trade. So when I say downside or upside, if we can establish that, it's going to be very easy to take the flags. There's nothing here on the chart that's going to tell us direction tomorrow. There's no big reversal candle or anything. And, there is a lot of momentum to the upside, and there's a seasonal effect. So I'm not going to say that doesn't follow. I'm more tend to be bullish on this week. But we'll see. We'll see what happens tomorrow. We get back towards the highs, which is 47.35. That leaves us I think we had 40, it goes around here, 48.04. So a little over 100 points away, or less, a little less. And we've seen the market go 100 points in a day. So I more tend to believe that we get to the highs right on January, right when I called it. But I think we're going to get another big move. So I'm not going to be hedging myself. I'm just going to look for the strength. If we just see the strength, I think we focus on the flags. Try not to be short too much. We'll see. All right. So I wish I could give you more on that. Let's take a look at the NDX. And again, it's going to be hard to gauge that one too. It's just perfect. And we could be embedded here, and this thing could really take off. So same situation. Now the Russell, that was our pick for the week. That was our special watch list. And yes, it was. IWM. And you can see where we circled it. Well, actually, where I like the Russell. And look at the explosive move. Now, someone mentioned today in an email to me, do I see anything about this triple top here? It's more of a quadruple top in this range, but I honestly think this is just a long channel. Yeah, it makes sense to take profits here. A gambler, has to make that choice if he wants to look for that breakout. Now, I think because everything is just working so well, you got to continue to believe that things are going to continue to work well, especially with small caps. Small caps have a great January. They start mid-month. This is some beginning. It's 2 days here. We're not really into that area yet. So next week is supposed to be very bullish on this. I think we break out of this base. I think we break out. Again, in the last, what did we say was one of the best ways to trade this? Anybody remember? All right, the TNA. Everyone likes that word. TNA in the chat room. We moved from that low to the high here on the IWM 6%. 6% we moved up here. 6. Now, That's not bad for 2 days. Now the TNA is going to give us 3 times that. So that makes 3 times 6 will probably be about 18 to 20. So let's take a look at that. I would say around the 18, give or take a couple points. I didn't eyeball this. 21, or we'll call it 20. 20. We'll call it 20. I had circles here, meaning if there's any pullback, to buy the pullback. But as you can see, there was no such thing as a pullback on this at all. And this, again, still looks good. So we just have to wait on that now. 2 stocks to watch. SWK, nice comeback. That's also in a long base. And I think that breaks out of the base also. A long base. That looks really good. We were in at 95. It's 101. And another good one is ALB. I have 40 shares at 125. It's 146 today. So we bought a lot of these on the base, and that they got oversold here. Remember when this thing rotated back down? I said, start looking to buy it. So 125, if you got in, then you're sitting pretty. I'm going to continue to hold this. We have a big candle. I think this thing gets back up to where these insiders were getting in to above 171, but we'll take 164. We'll take 164. Also, you can see we're at a very extreme level up here on the stochastics. When we get up around that 90 area, the signal line gets up there. We're going to probably, I'm going to look for a little bit more strength. I mean, we're close to a sell on this. New stock today we got into, NE, is off the watch list. I'm a little late on it. Should have got in when I circled it. I said this one. I was going to give it a couple days, and now I'm in it. You know what? Because I took some profits on the other stuff, and I'm willing to hold on to this. It's a Russell play. It's a Russell. We took up 5 stocks on the Russell in that last video. You can look it up on YouTube. So, just looking for this to break out. We take a look at the big picture. It's been acting pretty good. It went from 30 now to 45. And there's a couple other ones, but we're going to leave you with that. Again, I tried to keep this down under 15 minutes. It's 27 minutes. I apologize. If you have any comments, you want to scream at me or ask me any questions, you can email me at ironaction@yahoo.com. Appreciate it. Or leave a comment, and I'll try to get back to you on that. All right? Have a good one. I'm going to work on a video now for our scalping technique off the 2020 bull flag, which is a rockbot setup, but I want to show you how to do it manually on your NinjaTrader platform. So look for that video, and also head over to daytradingradio.com for complete coverage, trade alerts, and everything else, and the bots, and the scripts, and chat rooms, and me. Good night.